First this morning, we have a massive infrastructure deficit in this country, $210 billion odd, and fixing it takes too long and it costs too much. So Simplicity has launched InfraKiwi, which is a new company aiming to invest in New Zealand's key infrastructure, all the stuff from energy, water, transport. It's going to be locally owned and expected to be largely funded by KiwiSaver capital. So how's it going to work? And how could it change how we build and pay for the infrastructure we so desperately need? Sam Stubbs is Simplicity's Managing Director. Good morning to you, Sam.
Good morning, Nadine. Hi.
Can you give us an idea how InfraKiwi will actually work? Are you going to build the infrastructure or invest in the infrastructure? How is it going to go?
Yeah, so what we're intending to do is basically seed this ourselves with Simplicity KiwiSaver and investment funds, and then ultimately our aspiration is to get this listed on the New Zealand Stock Exchange so all New Zealanders can invest in it. And what it will do is it will buy the infrastructure that is already built or the infrastructure which has just been built. So we won't be developing it, but we will buy it once it's been developed. And that's a huge range of assets. That's, power, water, roads, schools, hospitals, courts, all the infrastructure that we all need and use. And the idea here, Nadine, is that we as Kiwis, we're going to save hundreds of billions of dollars in KiwiSaver. Now, that could fund infrastructure overseas and you get the investment returns, but it wouldn't generate the jobs and it wouldn't generate the infrastructure that we use. So this is a Kiwi solution to a Kiwi problem. And the intention always is that InfraKiwi will only ever have New Zealand investors and New Zealand shareholders.
How will that work though? If you list on the stock exchange, won't that then open you up to anyone from anywhere investing in you?
Yeah, that's an interesting question, but it is actually possible to restrict the shareholders that you have on the stock exchange. And we've had conversations with them and they're perfectly happy for us to say, look, we only want New Zealand shareholders because we can now afford to fund our own solutions, Nadine. In the past, we always had to go cap in hand to offshore investors to be able to afford the really big ticket items like infrastructure. But now with KiwiSaver, we can afford to do this ourselves, as they have done in Australia. So effectively what we're doing is what they've done in Australia, Canada, the UK, the US, and so on, which is actually create a really large local infrastructure investment vehicle. And that'll give us access to the sort of investments we don't think offshore buyers would be allowed to buy here.
Typically though, we need to diversify, right, our KiwiSaver investments. How will that be maintained if you're ploughing so much into New Zealand infrastructure?
Yeah, sure. So what we will start off doing is putting actually a small amount of the very large amount of money we already invest to seed this. And ultimately what we want is for all Kiwis and all KiwiSavers to invest a little bit of what they have in the infrastructure that we use. So typically overseas of a typical KiwiSaver-like retirement portfolio, about between sort of 5 and 20% would be in infrastructure. And remember, these are the bills that we all pay, right? So they are typically very reliable cash flow generating investments. This is, power companies, water companies, toll roads, things like that. So they're very long-term reliable investments because we use them and we pay for them. And because of that, you can have a slightly larger allocation than you normally would. But the average KiwiSaver fund will still have thousands of investments in many different countries. This will just be one of them.
If you're not building it, you're just buying it with this company, how is that going to actually encourage more of it that we so desperately need?
Yeah, no, it's a great question. I'll give you an example. We often talk about a second harbour bridge in Auckland, right? And what happens is one government pays for a whole lot of, surveys and reports and so on. The next government rips them up. But if one government did that, decided and committed and said, look, you build it, and in this case, we use as an example, InfraKiwi will buy it at the end, that means that government, and that's now contract law, that government will actually be obliged to build it, and subsequent governments will, because we'll be buying it. So we will facilitate the building of it because then the government knows who the long-term owner will be. And that could happen in a whole lot of areas. It's not just roads. It could happen with power grids, water networks, sewage treatment plants, all the stuff that we use. And so if we were going to be the ultimate buyer and the long-term operator and holder of that asset, that would encourage people to buy them, including the government. And so in that sense, you might be selling the family silver, but you're selling it to the family. You're just selling it to Kiwis. And in a way also, it's a way of getting public ownership, but without the government.
It's a really interesting concept and Lord knows we need it. Thank you so much, Sam Stubbs. Look forward to seeing how you go. Sam Stubbs, Simplicity's Managing Director. Now, if you'd like to weigh in on that or any of our